Hey everybody, it's Wayne Nichols. Let's get you a portfolio update. Apologies in advance. I was a slacker when it came to my update last week, and this is something that I like to do as well. So I felt that void when I wasn't able to document my journey. So thanks for being patient if you were on the lookout for this portfolio update. As always, let's go ahead and kick things off with M1. And I want to start by pointing out when I was a very early investor, and I laugh because I just started my journey in 2021, as you may know. I remember watching, all of my favorite content creators on YouTube, and they would talk about this concept of they loved it. They loved it when the market was down. They loved it when there was just red on their board of stocks. And I remember saying, what a complete crock of BS, right? Nobody really wants to have red days. Well, here I am. I guess I would say I'm a little bit more wiser in my investing strategy and my overall outlook or disposition to the stock market. And I agree now. I completely understand what they are saying. I love it when the market is down. It really opens up opportunities to buy low. So right now for the M1 portfolio, if we look at the last week, I'm down well over 6%. That's a loss of $7,800. My portfolio for M1 currently stands at just over $113,000. And I'm okay with that. And it really goes back to what I've done to restructure my portfolio. As you know, in my M1, I've got 4 slices: my quarterly dividends, my monthly dividends, my long-term hold, and my ETF. Currently, my long-term hold slice is at 80%, which means foreseeably for the next year, maybe even longer, all of my daily/weekly contributions are going to go to the stocks in that long-term hold. Let me get on my soapbox here real quick and complain about M1's the way they calculate the loss gain. Take a look at this. If I click on all, it would indicate, if I look at it from this view, that my total loss is nearly 15%. And it does factor in earned dividends. But, you see here a loss of $5,800. But if I go to holdings, this breaks down, I think, what is the more accurate cost basis versus value. And I have an unrealized loss of nearly $9,000. So I continue to struggle as to why these figures don't match up. Maybe it's the dividend, which doesn't make sense to me as well, because with this factor dividend of $1,000, if you add that or you minus it from the $5,800, that doesn't seem to add up to this number as well. So I'm still perplexed about that. You'll have to throw a comment if you don't mind. Let me know if you're seeing the same thing in your M1 portfolio. So we are down for the week. I guess that's all that matters here for this weekly update. Let's go ahead and take a look at the stocks in the long-term hold slice. One of the things that I talked about in my last update was my decision to pause my Johnson & Johnson contributions. I lowered this allocation percentage from 7% down to 1%. And that was really because I had some concerns about the lawsuits that were in the news and this sort of water cooler talk, if you will, about, the liability that Johnson & Johnson is going to potentially face. I'm glad I didn't just sell off my position in Johnson & Johnson. I think that would have been something the old Wayne would have done maybe a couple of years ago, maybe even a couple of months ago. And so I'm glad I was able just to pause those contributions. That's something that you should consider as well. Don't make a knee-jerk reaction if you see something in the news or you watch another content creator and you obviously appreciate the advice that they put out. You should do your own research, and I did do that with Johnson & Johnson. So I am back to the same comfort level as I was before. I do want to keep Johnson & Johnson in my long-term hold slice. I've bumped that slice allocation back up to 7%. And as it turns out, not only is Johnson & Johnson down, but everything in my long-term hold slice is currently down. So once again, I go back to, I now agree. I love it that the market is down. I am able to buy at better prices, average down. And as long as you're comfortable with what's in your portfolio, it really shouldn't matter if we experience weeks, maybe even months. Now, obviously, could something change in here? Yeah. Do I have stocks in this long-term hold slice that are a favorite? Do I have my least favorite? Absolutely. So, it's not to say that changes couldn't happen, but for right now, I'm very, very happy with the slow and steady progress of my long-term hold slice. So let's get you a quick update on all of the purchases that I made during this past week. As you know, I contribute $50 per day, Monday through Friday. And so here are all the trades that I made Monday through Friday. We'll go through these rather quickly. You can see here on Monday, I only had 4 buys for McDonald's, Esso, Visa, Johnson & Johnson. On Tuesday, I had 7 buys, Union Pacific, in addition to the others that I already named. I think Walmart's also included in this list as well. Wednesday, I had a total of 8 buys, so AVGO, Visa, McDonald's, Esso, Walmart, XOM, UNP, and Johnson & Johnson. Remember, because that target allocation for the long-term hold slice is so high, all of my money is going to continuously go to these 8 or 9 stocks until those percentages within that slice are on an even playing field. Here are all my purchases on Thursday. It looks the same as you saw on Wednesday. And then Friday the 10th, I had some dividends included in this purchase. So you can see here a lot more significant buys for not only Friday, but the week as a whole. So before we switch over to my Robinhood brokerage, let's give you a quick look or a quick peek at what's in the total holdings tab of my M1 portfolio. As you can see here, I have a total of 46 positions. Let's go ahead and sort this on the stocks that are doing the best. And this is sorted not on cash value, but actually the percentage. So CubeSmart, Vici, WP Carey, AVGO, EPD, Texas Roadhouse, MO, JetQ, Pepsi, Cisco, and AbbVie. All of these stocks are currently in the green. Let's go ahead and sort this in the opposite way. And we're going to go ahead and focus on my biggest losers. MPW, which, this has been quite the buzz topic of stocks, or the buzz stock, if you will. A lot of people are kind of on the fence. I only have a very small position. I own 14 shares. So I'm going to go ahead and ride this one out, but I have been following along with, everything that's being discussed with MPW and their current issues. I'm currently down 41% in that position, but again, not to minimize, right, the $200, it is only $200 though. Aries, I am down 28%. HTGC, which if I'm not mistaken, this week I earned a rather significant dividend. I'm down 20%. Horizon Technology, a monthly pair, I'm down nearly 17%. CEQP down 15%. Starwood Properties 13%. OCSL, the biggest or the largest dividend payer on an annual basis, I'm down 13%. Prologis, I'm also down. SPHD, a monthly payer. ADC, also a monthly payer. ARCC, SPID, ABR, GLAD, Johnson & Johnson, ORCC, SCHD, I'm down nearly 5.5%. STAG, Devo, Esso, JEPI, which is interesting because if you look at JEPI and JEPQ is the newer ETF fund. JEPQ is doing way better than JEPI, but I'm still glad to own both. CSWC, ExxonMobil, Walmart, Union Pacific, Kroger, Visa, VYM and ETF, Lowe's, Procter & Gamble, even the monthly pair is down, Coca-Cola, VTI, McDonald's, and Maine. So far more stocks in my portfolio out of the total of 46 holdings are in the red, but I go back to this mindset. I'm glad to have and to be honest, you might even call BS on it. I hope the next month is nothing but a sea of red in my portfolio. I would love the opportunity to buy at a cheaper price, especially for my stocks that are in the long-term hold slice. The only regret that I have, and we'll go back to my portfolio, is because I do have so many stocks and so little money that I'm contributing on a weekly basis, none of my stocks in my quarterly dividend slice, nothing in my monthly dividend slice, and nothing in my ETF slice am I adding money to. So that's the one downside to having as many stocks. Clearly, the only thing receiving attention or funding or money is going to be that long-term hold size. So of course I want these stocks to remain in the red, which clearly everything but AVGO is there. So we'll see if this momentum continues. But again, I want your opinion on this. Are you in the phase of your investment period where you dread seeing red? Or do you, like me, enjoy these red days because it gives you those buying opportunities? Be sure to throw it out in the comments. Okay, let's give you an update on my Robinhood brokerage. You can see here for the week, I'm down nearly 4%. That's about $15,000. My current brokerage value is at $384,000. Remember, I do have some cash in there that I keep on the books to sell my options. One thing that I've been kind of tracking for the last month or so is the accrued interest on my uninvested cash. And you can see here, so far I'm up to $17.14. This is nice because it is nice to keep cash in your brokerage. I do use this just in case there are some real good buying opportunities in addition to selling cash secured puts. So why not earn? And in this case, it's 4.15% interest. I am a Robinhood Gold member. It's not a shameless plug. I pay my $5 a month, but I have, there's value in that for me, not just because of the monthly interest. But again, I am down for the week, nearly $15,000. Now, for looking at everything as a whole, hold your breath on this. I am down nearly $41,000. And I already know my biggest losers in my Robinhood portfolio is going to be Tesla and Amazon. So I'm really, really continuing to be patient for those positions. I am actively selling covered calls. We'll get to that, by the way, in the update here in a few moments. But I wanted to give you a quick rundown on how my Robinhood brokerage looks. Let's go ahead and give you a breakdown on my Robinhood holdings. As I mentioned, I do have a fair amount of cash, about $36,000. Remember, not all $36,000 will earn the interest if I have active cash secured put contracts. So that's why you saw earlier, I'm only earning interest on, I think, $13,000 to $14,000. That means stocks and options, 90% of this 384 number for about $347,000. Let's go ahead and sort on the best performing stocks currently in my Robinhood brokerage. As a reminder, if you're new to these updates, the reason I have two accounts, right? I've got Robinhood and M1. Robinhood I use exclusively to sell options, so that's cash secured puts as well as selling covered calls. If I wasn't selling covered calls on Apple or Starbucks or Best Buy or FedEx or Microsoft, I would keep those holdings in my M1 brokerage. But because I am trying to earn steady cash flow by selling covered calls, that's why I have two brokerages. And I love Robinhood because, plain and simple, there's no fees and the interface is very, very easy and intuitive to use. So Apple is a big earner in my portfolio, followed by Starbucks. Celsius is doing rather well. Best Buy, FedEx, Microsoft, Costco. The iShares Russell 2000 ETF is doing very well. And then Nike, I only own one share, but it's doing rather well as well. Let's go ahead and sort this in the opposite order. And just like I mentioned, I already know that my biggest loser is going to be Tesla. I am down $30,000. This is one where I just have to remain patient. I made my bed as far as selling cash secured puts, and I was assigned on those cash secured puts, and now I have to lie in my bed. But in the meantime, I am generating cash flow by selling covered calls against my 300 shares. Amazon, I am also in the red. I'm down nearly $22,000. I own 600 plus shares, and I am actively selling covered calls. Hopefully Amazon, I think if we're talking about which is going to go up first to at least a break-even point, it's going to be Amazon. I don't expect Tesla to break even anytime soon, but I do expect Amazon in the next, we'll say 6 months. Again, it's nothing more than just me projecting. Of course, me crossing my fingers, wishing and hoping, but I do think Amazon is going to go back up to my average cost price of $126. At that point, I'm going to make a decision. Do I continue to sell covered calls or do I sell off my Amazon position and maybe buy another stock? You'll have to stay tuned on that. Meta, I'm also down. Google, I'm also down. Google, it's one of those where I'm okay with this. Out of all of these stocks that I'm currently down on, Google, I'm just trying to remain cool as a cucumber because I'm down nearly 4,000, but I am generating consistent cash flow by selling calls against Google, and I love it. Traeger, ooh, I wish I could say I was optimistic about Traeger. I am not. It by far is one of my biggest losers, right? I mean, yeah, I'm down 30,000 in Tesla. But the math on Traeger, right? You look at my average cost of 14.38, and the current share price is $3.56. I might have to make a decision by the end of the year if I want to go ahead and just sell those to take advantage of some tax loss harvesting. I will say that I am selling the occasional covered call on my Traeger position, but it's nothing that's going to go ahead and take a chunk out of this deficit. I'm also down on CVS, Target's down, Southwest Airlines, which I talked about in an earlier video. This one, I am just waiting for the price to rebound, and I'm also selling covered calls, and I hope really to break even by selling covered calls, and I can sell off my shares even at a loss as long as I can break even with the amount of premium I've earned from selling covered calls. Okay, let's get to the fun stuff. And the fun stuff for me are two things. Dividend income and then generating that cash flow by selling covered calls. And this was a fantastic week in the area of dividends in my M1 portfolio. Starting things off on the 6th, I earned $41 from JEPI. $43 from JEPQ. Again, I go back to, it's funny because JEPI gets talked about a whole lot more, and it should. JEPQ is the new kid on the block. I think this fund only began, it was maybe May of 2022. So I own 100 shares. I've got a pretty fantastic cost basis on that. And again, it's a cheaper price for a share of JEPQ compared to JEPI. And yet, take a look here, it earns slightly more on the 100 plus shares that I own. SO paid me out $3.42. Johnson & Johnson, right? This is kind of the reason why I came back to my senses with holding on to Johnson & Johnson, riding out even though, Johnson & Johnson, has some drama with the lawsuits, I still think it is definitely going to be a worthwhile stock to hold on to in the long term. HTGC was by far the biggest payer this week for dividends. I earned, nearly $110, and then ExxonMobil also paid me out $1.89. All right, let's give you an update on all the dividends that I received this week in my Robinhood brokerage, starting things off with Microsoft. My biggest payer for the week, $136.77. That's 68 cents per share, and I own a total of 201 shares. I'm actively selling covered calls as well, and I've been earning some decent cash flow from those options. Target was my next biggest payer, $123.22. That's for a total of 114 shares with a dividend per share of 108. Chevron paid me $2.18, and to wind out the week, UPS paid me $54.75. That's $1.62 times my 33 plus shares that I own. So let's go ahead and total up the dividends that I have received so far in March. We'll go ahead and kick things off by inputting the numbers from Robinhood. That's going to be a total of $316.92. M1, I earned a total of $202.82. That is a total so far for March of $519.74. So if we now look at the breakdown for all the dividends received for the month and the year, that means so far in 2023, with the updated figure of $519.74, I have earned a total in passive dividend income of $1,864.22, which brings me to this week's small goal, big victory, and that is going to be the total amount of dividend income earned this year completely surpasses the total amount of dividends that I earned in the entire year of 2021. Yes, that's correct. Take a look here. So far in 2023, $1,864. Remember, I bought my first stock ever in early 2021. And that year I earned nearly $1,400. So kind of a cool achievement, if you will, that just 3 months into 2023, I've already surpassed 2021. Again, I'm really proud of that number. And last but not least, let's go ahead and give you an update on all of the covered calls as well as cash secured puts that I have been trading for the last week. And remember, when we have a down market when it comes to selling covered calls, that's a great thing because it means that those strike prices haven't been reached, which means that I'm going to be able to hopefully buy to close out early those contracts. So from March 6th to March 10th, I was able to generate $455 of covered call premium. Let's go ahead and take a look here at the cash secured puts that I sold this week. Not too many of them, but I was able to generate about $92 in premium income from those cash secured puts. Let's go ahead and give you an update. Before I input those numbers, the last update we left off on between covered calls, cash secured puts in 2023, I was at $6,853. So now we have those updated numbers. Take a look here at February and March. The number of contracts has been updated for the covered call side as well as the cash secured put side. I have sold a total of 171 covered calls, earning $5,901. On the cash secured put side, I have sold a total of 17 contracts, earning $2,348. That's a total of $8,249. Not bad considering we're only 3 months into 2023. I also want to point out that number does not include the premium that I've earned from selling covered calls on Celsius as well as running the wheel strategy on Amazon. So Amazon, I've earned $152. You add that to the $1,300. So that's $1,400 that's not included. So clearly, if you look at 2023, I have earned well over $9,000. I am very excited about that number. Again, I love generating passive income through dividends, but I also like working to generate cash flow on a consistent basis by selling covered calls as well as cash secured puts. Hey, as always, thanks so much for tuning in. If you like the content, be sure to give it a thumbs up and leave me a comment on how your week was, things that you purchased, how you're liking these videos, what you don't like. I'm certainly open to any constructive feedback, and we'll see you on the next one. Thanks so very much.